What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you guys are having a wonderful day, my friends. Sorry, I'm running late today. 3-hour plane delay. So you guys know how that goes. But I promise you that I would not miss this stream tonight because I had an excellent day. And there's some education that I really want to drop here to help you guys out to get you ready for the rest of the week. All right. So if you're ready, my friends, let's step into the war zone. Hit me with a 1 real quick if the audio is good to go. Let me know if you can hear me. There might be a little bit of an echo, but hopefully it's not too bad. Oops, I can hear myself. So hit me with the 1 if we're all good. And I'm going to start off with the picks. Okay. So the main 4 picks we were looking at going into today were Apple, Uber, Microsoft, and Pfizer. So I always post my picks the night before. So make sure you're following the Twitter if you're not following Twitter, because you're going to get to see all of my picks. And then in my Discord, I have trade plans. Okay, so like trade plan, entry, stop loss target, and option strike. So we're going to focus on a few of these today, and I'm going to walk you through everything. So let's start off with Uber, because Uber was actually my quickest trade this morning, and I'm going to walk you through that. Okay, so when I pick a stock, guys, it needs to have a pattern on the daily chart first. Okay, so I'm going to hit the replay, and let's look at this right here on Uber. What pattern is this? What Trading Wars pattern are we looking at here? We're looking at a inside bar, right? And let's just go ahead and look at the last inside bar we had. We could see we had a huge breakout. The previous one, we had a gap up here. This one, we had a big drop. This one, a little bit of a chop. This one was a fake out. This one, big gap and go, double inside, gap and go, etc. Okay. So basically what I'm doing here is I'm looking for an opportunity to get in a stock, but it needs to meet my criteria first. So with this inside bar, not only does it give me a good chance of having a breakout the next day, but it also kills option premiums. Because remember, what do you think is going to happen? We'll go to the 5-minute chart and then you can see this. So what do you think is happening in this 5-minute range here? So I'm going to draw a box around it. So this was yesterday's price action. What do you think is happening to the option premium when we're just going back and forth like this and we're chopping around? Do you think the premium is decaying or the premium is increasing? What do you think? So because we go sideways for 1 full day, remember, options need to move with the Greeks need to move. We have a deadline for the option to be in the money. And if it's not in the money by that deadline, then it's going to be worthless, right? So when we've basically lost a day here, because look, we opened and closed pretty much in the same spot. Okay. So what we do now is I find these on my scanners and then I set up my trade. So let me set it up for you right here. So my entry was 22.99. So I'm gonna go ahead and draw that for you. 22.99. And I'll talk to you about how I automate these. So 22.99, we're gonna put this in green. Okay. So that's our long entry right there. And then my stop loss is 22.74. So I'm going to go hit that. Boom, boom. Pull this down right here. Run it up here. Boom, boom, boom. And make this in red. Okay. All right. So now let's step into the price action and let's watch how this played out. Okay. So I'm going to go down to a 1-minute chart so that we can clearly see this in detail. So here's our 1 minute. So remember, the green line is where we want to enter. The red line is our protective stop. Okay. So are your scanners on Tradingview as well as Trend? So Tradingview doesn't have scanners. So unfortunately, so that's why I use Trendspider. Okay, so here we go, guys. First 1-minute bar, we're in no man's land. So we need to, in order for us to get into the trade, it has to break the green line. Next candle comes in, guys, touches our green line. We're entered right there, a little bit of a pullback, and then we squeeze and she's gone. Beautiful. Okay. So on that particular trade, guys, so this is what we call a breakout trade. This is a trigger trade. I set this up the night before. I put my order in the night before, and here are the results right here. So Uber, $1,377, guys. Let me open my broker. I'll tell you right now how long the trade took. Give me a second. So I just wanted to really inspire you guys and just show you, like, trading is not what you think it is. There is obviously live trading where you sit at the chart, you look for the patterns. But a lot of institutions, a lot of big traders, a lot of big money, do you really think they're there trading 9 hours a day like some of you guys are staring at the screen? Or do you think they're taking high probability trades like this, with huge size and stepping away. What do you think? Hit me with a 1 if you think they're more methodical. Hit me with a 2 if you think they're staring at the screen all day. What do you guys think? So I got into this trade at 9:31 and I got out of the trade at 9:45. So within 15 minutes to make that profit. Okay. And for me on this trade, I use shares, no options on this trade, because I have a big account. So I can use shares, right? You can make the same amount of gains with options. Because when you're doing something fully automated, sometimes you get a little bit of slippage. It depends on the broker. So if you have a bad broker and you do automated options, you might just always get filled at the bid, right? Or the ask, depending on if you're buying or selling. And that might screw up your gains. That's why I always prefer to do shares if I'm 100% automated. Okay. But you can do the entry automated with shares, and then you can manage it after that. You can manage it after that with manually. Okay. So the way that I took profit on this is I'll show you. So I'm going to take my fib from my low to my high. So we have a suggested first target right here, 23.23. And pretty much, guys, what I like doing here is I just like using extensions. So let's go back here to, this was the range from the day before the inside bar. And I just like to overlap these extensions. Okay. I like to overlap them, or I like to take it from the gaps, different techniques. Like I could take it from the gap here, right? And you could see from the gap, we're pushing up on the 272. So what I like to do here, guys, is I like to use various Fibonacci extensions as targets. Okay. And when I'm fully automated, I put my targets in the night before, and that's it. I don't touch them after that. And I don't move my stop loss until I'm in a good cushion for profit, or until we get a major candle. So for example, on this first 5-minute bar right here, guys, on this first 5-minute bar right here, okay, we go ahead, move that stop loss up to break even right away. So I don't manage it manually at all. All of these trades are fully automated for me. Okay. And you can automate it fully with options. I do as well, but you need to have a good broker. That's why I'm not recommending it for everybody. So with interactive brokers, that's a broker that I use. I can automate conditional orders with options. I wrote about this extensively in my book, and the slippage is pretty good. There's not much, right? And on SPY, so that's why I also recommend, if you want to do automated options trading, you use the index, use SPY, QQQ, right? Or the Russell, IWM, because their spread and the liquidity is so tight, right? It's so tight that with that tightness in the liquidity, you're not going to have slippage as much as if you traded a stock. So let's say you traded a low float stock, let's say like something like PLTR or something, not a low float, low volume, your spread might be huge. You see what I'm saying, guys? Hit me with a 1 if that makes sense. Does that make sense, guys? So so that was the profit there on Uber. Okay. And let's do Apple now, and I'll set it up again for you. Okay. So what I noticed on tech was something very interesting. Okay. And I shared this with you guys yesterday. We had a few holy grail patterns. Okay. So the holy grail pattern is the outside and inside bar. So we had holy grail in tech, right? So we had this holy grail here. And then if I go to Microsoft, we had another holy grail. Okay. Just remove these drawings that I have here. So the holy grail pattern is a rare pattern, right? So let's go back to Apple. Let's just look at the previous holy grails that we've had. So the last one we had was back in August 2021. Okay. And then we had a huge pop up. Okay. So literally, guys, a lot of the times what I'm trying to do is I'm just trying to let history repeat itself. Okay. And that's what patterns are. You're trading a pattern that has an edge, and you're looking for it to repeat itself. Okay. So I'm going to go ahead and hit the replay. Let's step in. So let me show you what a holy grail pattern looks like on a 5-minute chart. Okay. So here is your outside bar. That's your outside bar right there. Okay. And then your next day is an inside bar like this. So let's make this a different color so you can see. So that's actually what a holy grail looks like. Outside bar, inside bar. Okay. And what this does is the day we had that big move on the outside bar, we have a lot of traders that are trying to come in the next day, and they're thinking, okay, it's going to move even more. It's going to go even further, right? Like that's what the market likes to do to trap traders. But then the next day, instead, it just literally stays within the range. So that kills option premiums as well, right? And when we get a pattern like this is an ideal situation for us. We want to come in here and hit this pattern for the breakout, okay? Does that make sense? Hit me with a 10 if that makes sense. All right, so now I'm going to draw up the plan that I had. So long plan 150.80 right here, 150.80. So I'm going to make this in green. And then I'm going to go ahead and do 149.58 as the stop. Down here, take this down one notch and make it red. And then I'll show you the first target that we had right here, okay? So the first target is 151.96. So if you're doing the options here, what you want to do is you're going to set a conditional order when it breaks 150.80 to buy the 152.5 calls. Okay, and I usually go at the market price. I usually do the market price, and I'm comfortable with Apple, for example. If I'm going to do it with options, I'm comfortable because I know the spread's not going to be that bad, right? So you have to pick and choose your battles with which ones you want to do options, which ones you want to do shares, okay? All right, so our target 151.96. So I'm gonna go ahead here. That up right. This one, Apple took me all day to get to my target. It was extremely long. But I'll just show you how I stick with trades. Okay. So let's go down to 5 just so it's a little bit easier so you can see the boxes. Okay. So remember, the green line is where we want to get filled. If it doesn't break this green line, then we're not in the trade. If it opens above the green line, then it's fine. I leave it open. So if it comes back down and touches the green line, then I'm in the trade. Okay. So here we go. First candle comes in here, guys. A very powerful doji outside bar. You could see we got filled right there. And then the next candle comes in inside bar. What pattern is this, guys? Let me ask you guys. Let me see who's paying attention. What pattern is that? Who can tell me what pattern is that? And when I see things like this, it really inspires me with trading, right? It really inspires me because it's beautiful because the daily chart has this holy grail, right? The outside and inside bar. And then on the 5-minute chart, we get the same pattern right away. Holy grail. So we have a holy grail and a holy grail. And it just blows my mind that these things are happening on all the time frames. You're having reflective nature, weekly chart, monthly chart, daily chart. And then I love when we get a pattern within a pattern because it makes things even more powerful, right? So we have this right here. So we get filled right here. Okay, a little bit of a double inside, right? And look, chopped around for a while on here on Apple, chopped around for a while. And then finally we get the break. Okay. So nice little beautiful breakthrough here, guys. There's my first target. Once you get that first target, you can definitely just move the stop loss to break even, right? But if you're doing fully automated, then you don't move your stop loss. You just leave it till the end of the day. Okay. And yeah, right here, guys, beautiful. So a little bit of a trick that I like to use is when we have big body candles, like you see these big, powerful candles, you could take your trailing stop and move it below the lows of those big candles, okay? Because those big candles, if it's really a trend day, those big candles, they will never get taken out. We will never retest them, right? So you could even see here, that low of that candle held all day long because there's a lot of volume, there's a lot of power on that candle, all right? So that was Apple. So overall for me today, guys, I had a really, really good day. That's my total P&L on the day, 5,761. I also took a trade in Microsoft, was basically the same pattern. I'll just show you Microsoft real quick. Same thing, guys. So Microsoft here was the previous day. We broke through it, gone. And then Pfizer was the only one that I took a loser on. So it was pretty interesting because Pfizer was just doing the opposite of the market today. So I took a loss on Pfizer today. That one just came down. So in total, though, I'm up close to 6,000. I lost $350 on Pfizer. And I just want to give you a little bit of note on risk to reward right here. Okay. So with risk to reward, let me just show you. This is how your risk to reward needs to be structured. So this was the swing trade that we took on MNQ together. So that one's still running, so we can ignore that. But if we're going to lose 300, 350, 400 bucks on Pfizer, we got to be in the thousands for the other ones. Okay. So that way we have a 2-to-1 or a 3-to-1 times our money. And that way we're good to go. You see what I'm saying, guys? Because if, right, let's say we lose 3 of them. Okay, let's say we take four triggers, we lose 3, and the last one we make 4 times our money. Let's say that's your target. Then you're still going to make money. You're still going to be profitable at the end of the day. And that's the magic of risk to reward. Hit me with a 10 if that makes sense. Okay. Does that make sense? What I'm going to do here is I'm going to go look at SPY now. Guys, I don't really see a lot of people showing their P&L besides me. So, you know, if there's better things out there, by all means, I'm willing to learn. I am very willing to learn, but I come like show the profit, come here, we'll talk. I'll interview you on my stream. Show me the profit. That's the way I work. Everything looks good in hindsight, but making money is a different story. Okay, so let's talk about SPY today, and then we'll go into do some scans together, and then we'll wrap it up. Okay. So with SPY, we did the same thing. So we had a trigger plan for SPY. Long entry 392.12. Okay, so let me go ahead and draw that up. I'm gonna hit the replay right there. So right here, horizontal line, 392.12. I'll go ahead and make this green. And I want to teach you guys an important lesson today about the previous day's high. Okay, so remember, every single day, we have the previous day's high and the previous day's low marked up on the chart. That's very important. And I'm going to show you why it's so important today. And it really, really stood out today on SPY. Okay, so let's go ahead here. So chart's marked up, it's ready to go. So this is what I do every morning. Okay, so I have my trigger. I know where I want to go in my trigger. I have my previous day's high and low. That's going to help me with the range. Okay, we're going to talk about some fibs as well. Okay. And all right, so let's go right into this. So the first thing right here, if we go live commentary, so I'm going to start. So we got filled long on the trigger right at the open. So long trigger filled, guys, literally within 30 seconds of the open. So let me show you how that looks. Okay, and this is why it's important to have your orders automated as well, because otherwise sometimes you're going to miss it. So the green line is where we got in long. So you could see in the beginning, we took a little bit of heat on the trade. It did go red, but then we popped right back up. So the way that I managed this trade, guys, is once I saw this hammer wick, so I had a protective stop down here, but once this hammer wick came in, I moved my stop loss to here. So that way I don't lose the full amount on the trade. Let's say I risk $1,000, but let's say my stop is here. If I put it up here with the candlestick, now I'm only going to lose 500, right? And that's how I'm able to basically, I'm able to get a better risk to reward because I'm managing the trade through the candlesticks. Okay, so let's say you start off, you want to risk $1,000, but then on reality, you're only losing $500 or maybe 300, or maybe you're break even. Now, when you're doing your risk to reward calculation, so for example, here, like in this 100 trade journal, if you start journaling your winners and losers, all of a sudden now your risk to reward is even bigger than 2-to-1. It's even bigger than 3-to-1. It's even bigger than 4-to-1. And that's how you can stay profitable, even going through a losing streak. Okay. All right. So there we go. So here we got long. And then you could see here. So my first target was 392.50 and then 392.87. And the max stop loss was 391.56, which was the low of the wick. And I'm going to show you why it's so important to watch the previous day's high. So when I get in here, guys, the main focus here is, I'll talk about the triggers at the end, guys. The main focus here is trying to get to the white line, which is the previous day's high. We know a lot of the times there could be a false breakout. We know that, right? We trade long enough, just taking the break of the previous day's high is not going to be a profitable strategy. That's why I always come in lower. I always come in lower. So if you look at my triggers are going to be lower than the high or higher than the low so that I get in early. That's what I call front run, because by the time I get here to the white line, I could already be up money. Okay. So right there, guys, we get filled. We tag the white line. Okay. That's where I'm loading off most of my position because I know this is where we could reverse. And then you could see here, guys, we struggled. We struggled there. The bears tried the bears tried to take it down here, and the bulls stepped right back in with this outside bar. So this outside bar here, guys, was actually the play of the day, because remember that outside bar, it breaks the low, so that's a trap, and then we reverse back up, right? So this is a trap for anybody that was chasing the short, and then from here, guys, we start to squeeze. Beautiful. And then from there, guys, now we'll talk about the fib. So on Twitter today, I decided to post the afternoon leg for you guys for free. So I just wanted to show you what we do in the Twitter and the Discord. So I posted this up here. So let me walk you through this afternoon leg. So I'm just going to show you here. We had it drawn up right here, afternoon leg, same thing that I had on Twitter today. So let me just show you how that works. So the afternoon Fibonacci leg is basically going to come between, usually around lunchtime, right? Usually in lunchtime. Okay. So what you do is you're going to have a low and a high by lunchtime. And you're either going to, usually you'll have one side will usually establish itself for the rest of the day. So for example, in this case, the low of the day was established by 10:05. And there's an interesting stat behind that, that within the first hour of the day, you have a like 80% chance of developing the high or the low of the day. That's why this afternoon Fibonacci leg works really well, because you're betting that the low of the day is already in. We're betting right here that the low of the day is already in. Okay. So what you do here is you have your anchors, and if it goes higher, all you do is you just move that anchor higher. Okay. So you keep moving your anchor higher until we reverse. And then when we reverse, now you go to the golden zone. So the golden zone here, take that text box. Where is it at? Rectangle, 50 to the 786. And the easiest way to trade this is either as soon as it touches the level, you can get in right away. You keep a protective stop loss at the low of the day. Or if you come back down, guys, and you tag the fibs, right? And you tag it, you can go down to the 1 minute chart or even lower time frame, and you can wait for a confirmation candle. So let's watch this right here, guys. So we come down all the way down, nice little sell off here. So we even had this double top price action. Okay, we go higher. That's fine. That's fine. So we move it higher. So this is how I do it in real time. Okay, we move it higher, and then we move this like this. Okay, so and now we just wait. And this, what this does is it prevents you from being bad and getting into buying calls here. It prevents you from doing that. This is where you want to be. Right here is where you want to be. Okay, and let's go down to the 1 minute chart, and we could see. Look right here on the 50%. You guys see that hammer as well as this outside bar? That's the algo stepping in right there. It's stepping in. Okay, so the algo steps in right there on the 50. We put in that, look at the powerful, like look at the size of that wick, right? And that's showing you the buyers are there. Hit me with a 6 if that makes sense. And then from there, guys, right, you got your confirmation candles. And then I always take targets back at the next fibs above. Always do that. So the next fibs above. That's why I have all these lines, because those are targets. The golden zone is the only zone that I play in, the 50 to the 786. But all the rest of these are targets. Okay, they're all targets. And then let's go back here to the 5. So you'll see from here, guys, we even came back down to the 618 and the 786. And we had this little bit of a double bottom action here with this inside bar, and that took us right back into the close. So that was beautiful there, guys. That was beautiful. And that's where I prefer you to play. I prefer you, don't be chasing here. Don't be chasing here. Don't be chasing here. Because if you chase, then you're going to end up with a bad risk to reward. And even if it goes up and it goes sideways, you're probably still going to lose money. So wait for that dip. And if you don't get the dip, that's fine. You can come back another day, but you got to protect your capital. Okay. Can you short to the golden zone? Yes, you can. Definitely you can. But it's a little bit, it's harder to predict tops, right? Unless you're using the Fibonacci extensions. If you use an extension, right? So I'll show you an example of how you can short, right? So what you would do here is you would take a fib of the previous day's range. So here's your low and your high. And then what you would do is use the extensions right here. So like this 272. Okay. Wait. Yeah. So this 272 is where you can start getting in, right? To your short, or you can use the candlestick pattern. So you could see at the top, at the highs, we had a lot of inside bars. So these inside bars were confirmation here that we're slowing down, and you can use the other fibs above as your stop loss. Okay. Makes sense? Hit me with a 6 if that makes sense. We all good? I don't look at any flow or volume and stuff like that, because mainly I trade SPY and I trade high volume stocks. So it doesn't really matter in my opinion. And by time you get the data, I find, in my opinion, right, intraday, by time you get the data about like flow or something, it's already gone. It's already gone. So we need to be predictive when we trade. So for example, right, let's say you get a sweeper alert over here, but we really should be getting in down here. Because if we get in over here and we do this 100 times and it fails, let's say 50 times, you're going to lose money. But if you get in here and you win 34 out of 100 times, you might make more, you still might end up profitable. So rule of thumb for picking the trigger, I wrote about it extensively in my book. Check it out at tradingwars.com. But just as a quick kind of guide, just look for wicks, right? I like to use wicks as my guidance for where I want to set my trigger. And I like to use the average true range as well as the Fibonacci, those two things. Okay. So the other thing is when we're pulling back like this, you're probably going to see the opposite of what you want to see, right? You might be seeing puts coming in, but really and truly the Fibonacci is supporting a long direction, right? So I just like to keep it like I do what works for me, right? If I make money doing what I do, then that's great, right? I'm going to keep doing that. Whatever works for you guys, whatever works for you, you can do it as long as it makes you money, right? There's many ways to make money in the stock market. Trust me. There's many ways to lose money too. I think there's more ways to lose money than to make money. All right. So what we're going to do here is the last thing that I want to do is I want to give a recap on my swing trade on futures, MNQ. Okay. So I'm going to go ahead here to the daily. So I just want to show this is a little bit of like a swing trading lesson for anyone that's new because I'm streaming at a different time today. So I expect there to be a lot of different people here. So I took a swing trade on the NASDAQ using futures contracts right here. So this yellow line was my entry, 11,291. So a lot of you may be asking, why did I do that? So I love to take long-term swing trades and investment plays using futures contracts. That's how I turned $5,000 into $80,000 using futures contracts because it's extremely leveraged. It's extremely leveraged and I don't have time decay. Okay, so I don't have Greeks. It's like buying shares on steroids. So let that sink in for a second. Hit me with a 1 if that makes sense. Buying futures contracts, you have huge leverage. You're on margin, that's for sure. But you don't have decay. You don't have Greeks. So it's like you buy it at $1, you sell it at $2, you make money. So I love doing this when I feel like I want to be in something for a long time. You must have a stop loss when you trade these stuff. Because if you don't, you'll get margin called. Okay? You'll get margin called. And that, so let me go ahead and just explain the strategy. So what I like to do when I want to take bigger plays is I like to start off with the weekly chart. Okay. And this is something I call out in my Discord as well. So what I did here is I took the Fibonacci from the high to the low. So this was the last swing low we had. And what I used is exactly what I just showed you about the extensions. I use the same thing. So notice how we came here on the 50% extension, right, for NQ. And that was basically showing me that this bear, right, it's pushed down, it pulled back 61.8%, and then it got its extension. So at that point, I'm thinking the bear is full. It's eaten. It's already dropped the market literally 30+% in the first half of the year. So that's when I come in. So I started off with the weekly, and then on the daily, we got this tight inside bar. And that tight inside bar was my cue that, hey, I could try it right here and have a tight stop loss. If it doesn't work out, then guess what? I can retry again. But luckily, I caught it right there on the yellow line. And then what I did here, guys, is when we started coming back down here, I moved my stop loss to break even. And thankfully, sometimes you need a little bit of luck. I didn't get stopped out. And how I was able to do that as well is I noticed that my stop loss was below. So my entry was below the 786 fib of that recent push. So that also gave me confidence. Okay. So currently, like you could see here, guys, this is just one contract. And I just really wanted to show you guys the power of, one futures contract. So this is one contract. Where's the P&L? Right here. So $2,319 on one contract. Okay. Micro. It's a micro contract. It's not even a full contract. So in terms of margin, you only need like $1,000 or $2,000 to hold that. Right. And basically you would have doubled your account. I don't recommend that. Don't get me wrong. I don't recommend that, but I'm just showing you the power. Okay. Very, very powerful tool. All right, so there's the update there. And you know, we'll just keep going here and seeing where I get. And at the end of the week, what I'm gonna do is I'm gonna start moving up my stop loss to protect me. I might just move my stop loss either below this fib here, or I'm gonna put it right below this candle. So at least I'll be able to make some more money. All right. So the contracts depends on the broker. So just look up the broker, give them a call. They all charge different fees. They all have different margin requirements, right? For micros, it's not much. Let me check right now. I'll check right now. Hold on. So in terms of commissions, oh, it's not showing me right now, but okay. In terms of commissions, it was 57 cents. Okay, 57 cents for S&P. The NQ one, I don't have it. I have to go look back in the broker because I got into this weeks ago. But for futures, for like trading the S&P 500, 57, whatever I said, 56 cents, something like that. Let me check again. 57 cents for one contract. Right? So that's a micro, though. That's a micro. So remember, this is the micro, not the full. Okay? Hit me with a 6. Does that make sense? That's per one contract transaction. Does that make sense, guys? Did you enjoy the stream? I love being here. I enjoy it. I love getting better every day. Whatever I'm doing, I want to get better. I want to be a high performer in everything I do. And I committed to YouTube. I committed to giving you guys education. And I don't want to miss streams. I don't want to let you down. I want to share my journey with you. And that's what I'm trying to do here. All right. Whether we win or lose, at least we tried. And that's the most important thing for me. And I know some of you guys are on that line where you're like, you're not sure. But let me tell you something, guys. You don't want to live your life with regret. Even if you paper trade, even if you trade even if you trade $10 risk, whatever. You could look at yourself at the end of the day in the mirror and say, I tried. Whether you make it or you don't, it doesn't matter. If you put in the effort and you keep putting in the effort, at some point, it's all going to make sense. Okay. It will, because nothing is rocket science in life. You know what I mean? It really comes down to discipline, consistency, everything. Discipline, even rocket science is discipline and consistency. That's it. You know what I'm saying, guys? All right. So we're going to do some scans real quick. Let's go ahead. Tradingwars.com. You know where I'm at, guys. Come check me out. If you get any one of my 3 books, I see a lot of you have questions on the triggers. I cover that in the SPY Options Mastery and the Stock Options Trading book. I cover the triggers on there. And Fibonacci and Options Mastery is all about the fibs. So if you get any one of my 3 books, guys, you get 1 month for free. You can come trade with us live tomorrow for 30 days. And you get all the indicators and scanners for life for free. Okay? So check me out, guys, at tradingwars.com, or you can sign up right here on the main page. Sign up right here on the main page as well. Okay? All right, so here we go. So let's go ahead to Trendspider here. Let's see what scans we have. So I'm going to show you guys what I do. So I'm going to hit the show sidebar like that. So the first thing I'm going to do is go to the blue raindrop. Let's see if we have any. So nothing to my liking. Like, I don't expect there to be a lot. Oh, never mind. We got the big boy here, Tesla. So this is going to be a major pick going into tomorrow. I didn't even have time to go through everything yet. Literally just got off a plane and came to stream for you guys. So you could see the blue raindrops. We've been playing them from day trades on Tesla many, many times. And they've done well. I can't complain. Look at this last Holy Grail on Tesla was a winner as well. Don't sleep on the Holy Grail, guys. It's a beautiful pattern. So what we're going to do with Tesla here is I have a bunch of tools that I'm testing out. So let's go ahead and look at this insider trading and see if it can give us any clues. So June 27th was the last big insider trade. So that doesn't really help us at all. So let's get rid of that. Let's look at seasonality and see if there's anything here. So we're currently in week 30 and 54% of the time we finish green. So definitely on track. Tesla had earnings as well. So it's going to be a big, big play for tomorrow. A lot of people were neutral. So you see that blue raindrop, what it's trying to tell you is a lot of people were neutral. There wasn't really a bias. So going into tomorrow, things can get extremely, extremely powerful. So let's go ahead here. Let's look at the Holy Grail. Let's see if we have anything. Got anything here? Any Holy Grails? Nope. So obviously there's not going to be much Holy Grails because of the fact that we had a big breakout today, right? So right here, Nirvana. Guys, if you have any questions about futures, I have a course that I did for futures on the YouTube. So check that out. I go through a lot of your questions there. All right. So no Nirvanas, nothing else, but we will be watching this blue rain drop on Tesla going into tomorrow for sure. Okay. So there we go, my friends. I hope you enjoyed the stream. Make sure you're doing the 100 trade challenge. Make sure you read the Trading Wars FAQ. Check me out at tradingwars.com. One more thing, I'm going to keep saying this, but my goal for this year is to break 25K subs. Okay. And I'm trying to get there where we've been growing quickly, and I appreciate all your support. So what I'm going to do when we break 25K subs, I'm going to be giving away $500. Okay. And I want somebody to use that towards trading. But if they don't, they're in a tough situation, they need to use it for something else, then that's totally fine. Okay. So I'm going to be giving away $500, at least 500. If we get there quicker, I'll do more. I'll give away more because I'm going to give away some of the money that I make from YouTube, like from ads and stuff like that. So I think, you guys support me here, I'll support you too. So please go ahead, guys, and subscribe. Help me with the subscribe. Let's get to 25K subs. I promise I'll take care of you guys. And I appreciate you guys. I really do. So check me out, tradingwars.com. Leave a comment as well. Drop a like too. Let's see if we can get the algorithm going. I'm telling you guys, for the stuff that I share here, I really just want to get to a wider audience, a bigger audience, because I really believe that I could change a lot of people's lives, even if it's not my strategy, but maybe it's my risk management, or maybe it's just me showing up here every day. It might give somebody the courage, or might give somebody the motivation to try this, and it could change their life. And that's where I'm right now in my life. That's where I'm trying to get at. Okay. That's where I'm trying to get at right now. I'm just trying to keep giving and keep pushing, guys. So I appreciate you guys. Thank you very much. We'll catch you up tomorrow. I'm going to post some pics for tomorrow right now. So check out the Twitter. Thank you very much.